My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, Bob Mortgage Nation? This is the 76th episode of the Mortgage Report. So here's what we're going to do. We're going to jump right into this because I know I'm wearing green today, but all last week, the stock market, the Dow, the bond market, it was red. It was not a good week at all. We did have some ADP numbers that came out, the jobs report that came in really strong. We also had, which was a big component of that, wage pressured inflation, and that's really what kind of sparked some downturn, I would say, in the bond market. But the big one was Fed Chair Jerome Powell just is out there talking about the fact that he is absolutely 100% not done increasing interest rates, and that has caused really a significant drop in what we saw this past week in the bond market. I mean, even JP Morgan is out there, their bank is talking about when, Jerome Powell talks, it's more about how much they worry about what he's going to be saying, because since he's been chair, you look at his comments and the post comments that he's been making, the stock market has lost about $1.5 trillion so of American wealth has been lost based on what his comments are after some of those meetings. So something that we really look at, it's going to take some type of correction for the bond market now to recover. It's going to take some type of correction in the stock market for money to move into the bond market. So a flight to safety where we can get money into this bond market now. Plus we still have tariffs that we have to be concerned with. Okay, but let's look at some of the markets and the charts right now. As you can see, it was not a good day. This was basically on Friday, our numbers, and you could see that we were looking at locking all this way. But you can see right here, I mean, we started this downward trend right here on the first and the second, right? So we started this all the way down. We broke through all of our support levels, and we kind of resided down here at the 99.719 support level. So it's been a significant drop in the last 5 days, really since Wednesday, Thursday, Friday, significant drops in the bond market. So that's where we are right now. So, I mean, guys, we have not seen that. I mean, we haven't seen that. I mean, I can go back on these max charts all the way to 2013, and we haven't even seen bond prices this low. So as you guys know, as bond prices drop, interest rates are rising, and that's why we started to see on a lot of products loan interest rates get into the fives. So as we kind of have told you guys all along, and don't panic, I mean, we do anticipate well into 2019 to see interest rates in the 5.25%, 5.5% range. We just are kind of getting there a little bit quicker right now than what any of us anticipated, and a lot of it is just directly tied to a strong economy, but yet what we're seeing with Fed Chair Powell's comments and what it's really creating out there, the uncertainty, and then of course we have the tariffs to deal with. So guys, bottom line right now, I was in a locking position. We started looking at that first thing Wednesday morning, held a locking position all the way through the rest of this week. I'm going to continue in a locking position so I can find out where our bottom floor of support is going to be, so we can figure out what our next sideways trading range will be, and see if there's any opportunities to pick up any type of positive movement in the next week. This upcoming week, it's pretty quiet, but we do have some CPI inflation numbers that we're going to look at and see if there's enough there that could bring some positive momentum back into the market and get us maybe an increase in bond pricing to draw the interest rates down a little bit. But right now we're not anticipating that at all. Everything is pointing to the bond market staying in maybe a little bit more of a sideways trading range, hopefully now, and interest rates still, sitting in that 5% range. So we're going to continue in a locking pattern. If you have any questions, definitely give me a phone call. And look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. my digits will pop up. Give us a phone call. I'd love to be able to help you with your home loan. Take care. Have a great weekend.